Greetings, members, one and all of the Salivation Nation. Let's take a look back at silver in 2021 and discuss what we can expect for silver in 2022. Let's explore. Silver, by pretty much every measure, has been a disappointment in 2021 in terms of its price performance, especially when we measure it against how it has performed over the last year. We're going to talk about this and reference an article from goldeagle.com that discusses a little bit of this and kind of give us a bit of an outline of what we can expect for silver in 2022. Now, obviously, as is always the case, I'm going to be referencing some of the statistics in this article, but most of this is going to be my opinion, and we'll see how it differs from their opinion. But again, opinions are just like that. Everybody has one, just like everybody else has something else. And notwithstanding, people can take away different aspects or different things from what people think about a subject. And I think that's the beauty of commentary, is it maybe will allow you to open up your mind a bit to different points of view, but also to kind of put things in perspective. The whole idea here is to get you to think and to develop your own opinion based off of opinions and, more importantly, facts. Facts matter in these types of situations. We have to kind of take a look at historical facts, the facts on the ground right now, and where we are heading in the future, and be able to make sound decisions. And because when you go to buy silver, you are spending your hard-earned money. That's right. These fiat notes, these Federal Reserve notes here, are being utilized to purchase your silver. And so therefore, when you make a purchase of silver, you must feel good about it, or at least have the confidence that you're doing the right thing. And it's difficult to feel that confidence when the price doesn't perform like we thought it should. So let's analyze a little bit about what has happened over the past year. It's been disappointing for all precious metal investors, especially as we round out the year here. Gold and silver are down since the beginning of the year, having lost as much as 11.3%. Gold is down 6.5%, and silver, which at one stage was down almost 20%, is down about 15% now. So admittedly, these returns followed strong gains in 2020, the year before, so that is something to keep in perspective. 2021 could be described as a year of consolidation, especially for gold, but I disagree with the sentiment regarding silver in this case. It was counterintuitive given the monetary background. Total assets of the five major central banks rose from $20.4 billion to $32.5 billion between February of 2020 and today, which works out at an average annualized increase of 32% for each of 2 years on the trot. So since 2006, total assets for these central banks have increased by 500%. Wow. Since February of 2020, U.S. M2 money supply has increased at an annualized rate of 20.2% for nearly two successive years, which now stands at over 90% of GDP just in that time period. Having started the millennium at 44.4% of GDP, but as will be demonstrated, adjusted for the temporary withdrawal of liquidity through reverse repurchase agreements, the true quantity of M2 money supply is practically 100% of GDP. That's pretty alarming. So there is a surplus of dollars and similar excess of all other major currencies in circulation, a global condition which has worsened considerably since March of 2020. The rate of inflation of currency and credit has never been so high on a global basis ever. Yet gold and silver are hardly affected by it, or hardly reflected it. And really, I would differ from that point, because I think gold, in a sense, has reflected by it. At least, we did see it go to its all-time high in August of 2020. Silver, though, is another story. Behind all of these fatal but common mistake is to fail to connect rising prices with currency debasement. No statement from any of the central banks on monetary policy have mentioned the quantity of currency, only the consequences for prices and interest rates. And there is broad consensus between central banks that rising interest rates are to be deployed only as a last resort. In fact, we know what's going to happen next year. What they say it's going to happen is going to be 3 rate hikes, probably about a quarter point each for the Federal Reserve. But we'll see how that plays out. And so we're at a situation now with especially the geopolitics, what's happening, what's coming up to with the Basel III, with the NSFR. Most banks must now comply with the NSFR, with the notable exceptions of the UK bank. And so the UK banks won't have to comply until the new year, which is just around the corner here. Will that make a move? I don't know. With silver and gold, especially silver, my guess is probably not. So far, all the stuff about Basel III has pretty much been a nothing burger, or any kind of price increases have been baked in from this talk, because the Basel III Accords have been essentially in process for years now, and we kind of knew it was coming. And so what's going on here with silver? Why has it performed so poorly, especially compared to gold, and obviously these M2 money supply increases, especially with the repurchase agreements, which really started back in 2019? Well, a lot of it is as a commodity. And one must take into consideration here that though other commodities like copper have gone up, more importantly, iron ore has gone down. So you think about it, there are other commodities that have been hit hard by the supply chain issues and what's been going on, and that has worked against them as commodities. Silver is seen, I think, more so as a commodity these days than as a monetary metal or as a hedge against economic instability. Hence why we see the gold to silver ratio at near 80 right now. So what does this mean? I think it means that we're going to see that working against silver into 2022. I think we have to be prepared for silver not to perform as we think it should in 2022. We must be realistic about the metal. It is a metal that has, perplexed us, especially with what's been going on with, J.P. Morgan. We know there's been stories that have occurred over the past year, a couple of years, and I've covered them extensively, with manipulation of silver and gold prices. But as you know, as I've talked about in the past, that manipulation works both ways, on the way up and on the way down, because these traders, they want to profit off trades. And when you do high-frequency trading and spoofing, it doesn't matter which way the price moves. It's about being able to make money off those trades. And so that means that in 2022, we're going to see probably more of the same that we've seen here in 2021. Quantitative easing will continue. We might see interest rates be increased a bit, which may reflect in lower silver prices and potentially lower gold prices at the beginning part of the year. And that could reflect into a further disappointing realm for many silver stackers out there. But I think as long as your expectations are not necessarily low, but realistic, given the markets today, because I think the markets have changed. And there's something about this dollar. It's the velocity that it is spent. And we're so far right now, even some of the early on relief packages that have been passed by Congress, and some of the increased monetary supply that is entered into the marketplace, it's not necessarily being spent at a rate fast enough to get us to a point of hyperinflation. Although we are seeing inflation at this point, many people feel that the dam is about to break for the dollar and other currencies around the world. But when will it happen? Many people thought it would happen this year. Many people think it should have happened 4 or 5 years ago with a third round of quantitative easing. But it hasn't. Why is that? Well, the dollar is the top dog in the breadbasket of other currencies that are out there. And the dollar index is strong. And I think that is another reason why precious metal prices have not broken out. And I don't look for them to really do that in 2022. But I don't know. No one can predict the future completely. I do believe we probably have seen some of the lows that we're going to see for silver in 2021. I don't see them going much lower. However, it doesn't mean that they won't. It doesn't mean that they can't. And we must be prepared for potentially sub $20 silver, at least at some time in 2022. However, as was once said on another channel quite some time ago, the dollar will continue to do what it does until it can't. In other words, people will have faith in the dollar until they don't. And when I'm talking about people, I'm talking about other nations, other central banks around the world. Right now, we can threaten sanctions with the pulling of dollars and held in assets that are held in dollars of some of these other nations. These other nations are holding more and more gold and accumulating more gold, such as Russia, China, Turkey, etc. And some of these nations are not friendly to the United States. So any kind of economic sanctions or threats won't hold as much weight if they have gold, which is the ultimate form of money, as recognized as the Bank of International Settlements as a Tier 1 asset, equal to and on par with cash, with the dollar. And so therefore, how will that affect silver? Well, if the dollar is weaker, with other nations not being as reliant upon it, that means that people will have less faith in it. The people of the world, nations of the world, other central banks around the world. 60% of all the nations transact in the dollar now. Could that move down to 50%? If that does, that's going to potentially weaken the dollar against other currencies. There is some prospect that we may see the euro under a great amount of pressure in 2022. We'll see. But nonetheless, others feel that there's going to be a large, massive movement into silver coming in 2022 because of the increased demand for silver in green technology, electricity, 5G, the biomedical field. And if that demand is as predicted, that could send other organizations, hedge funds, and moving into gold, or into silver specifically, pension funds and the like, and moving their portfolio allocation up to 2 to 3% into silver. And that could be a game changer for silver if this does occur. That's as predicted by Rick Rule. I might talk about that in a future video, but nonetheless, that is something that we should keep an eye on. Obviously, because of the low prices, silver has much greater headroom to move up in 2022. But I wouldn't expect it. I would not place any bets on it. And by the way, for those of us who stack silver, what kind of betting do? We bet on silver by buying it. And I would caution against buying too much silver in 2022. In other words, you don't want to lose your shirt on silver if it goes the other way or stays stagnant and you're paying high premiums for it. Yes, believe it or not, I'm cautioning you against buying too much silver. It's about diversification. It's about being smart with your money, with your purchases. Don't ever feel pressure to buy anything for any reason whatsoever. You must do your own research, your own due diligence. That's extremely important in anything in life. And the worst thing you can do is to go in debt buying anything, including silver. So there is kind of my prospects, kind of what we can expect in 2022. I think we can expect to a degree more of the same, and only be pleasantly surprised that the price skyrockets. But even then, act with caution, and don't be surprised if we see the price dip some in 2022. So there you have it. Let me know what your thoughts are in the comment section below. Would like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.